Hello from Trend Signal for a review of the data and events the week beginning the 5th of March. Main headlines on Monday morning. The Italian elections have seen some big gains for the populist parties. Not a great outcome for Italy, really, and most importantly, not a great outcome for the EU. Just when Germany, after months of negotiations, have got an agreement for government headed by, I suppose, what could be described as a weakened Angela Merkel. And that follows on from Germany's elections quite a while ago, last September, where they had their own surging populist party in AfD. Other headlines, not surprisingly, Trump and those tariffs on steel and they call it aluminium. Congress has warned against this, foreign leaders have warned against it, but Trump seems to be determined to go ahead with this, and without exception, really. So all steel and all aluminium, from wherever it comes from outside the US, will be subject to these tariffs of 25% on steel, 10% on aluminium. The threat of a trade war is very real for now. Does no good to any economy, least of all the US, which depends on free trade. The EU counter threat has already been met with a counter threat from Trump to slap a 10% tariff on all EU imported cars, and it was that tweet from Trump that was the reason why the DAX slumped the way it did first thing on Monday morning, not as a result of the Italian election, more because of the fall in some of the automakers, the likes of BMW, Daimler-Benz, VW, but they quickly recovered after about 45 minutes to an hour. So the DAX recovered in due course along on the back of that, of course. So the stakes are pretty high, as the effects could be quite damaging for any trade war, and the way it's escalating with counter threats is just getting out of hand, and it needs to be reviewed before the damage is done. So some not so positive headlines on Monday morning, but the main news for Europe certainly is the Italian elections, which have attracted not a lot of press coverage, partly because the laws in Italy prevent polls from 2 weeks before the vote being published. So there's been a bit of a no news, almost like a blackout of news to a certain extent. But in a nutshell, Berlusconi failed to get his alliance over the line. 36% of the vote. You need 40% minimum in Italy to form a government. So the largest single party will be this five-star movement set up by this cartoonist Grillo back in 2009. They got it's now 32% of the vote. It was originally posted as 31% of the vote. So the likely result is a hung parliament with negotiations to follow between all the main parties. But the notable miss was probably from Berlusconi, who had forged an alliance with the anti-immigrant Eurosceptic Northern League, which is obviously fairly right-wing, and they achieved what is likely to be 36% of the vote, but that's a combination of two parties, the Northern League getting around 18% of the vote. So Berlusconi not really achieving what he expected. And reports on Monday morning suggest there could be another election in a couple of months, 2 to 3 months, assuming no agreement can be reached between the parties. But the problem is that Five Star is left of centre, obviously, whereas the anti-immigrant Eurosceptic Northern League, as its name suggests, wanting immigration stopped in its tracks, is quite right-wing and more of a natural fit with Berlusconi, and definitely not a natural fit with Five Star. So they've got their problems in Italy, and that's affected the MIB this morning, or on Monday morning, I should say, down 2%, and Italian debt also under pressure as well. So the effects, apart from the knock-on effect on the immediate effect on the MIB and the Italian bonds, the euro was under a little bit of pressure, but I think it's a bit of a slow burn. This witness what's happened in Germany with since the elections back in late September. It's only just this weekend that the German Grand Coalition has been finally negotiated. So it's taken months. So I think it may be incorrect to focus attention just on the Italian election as being the reasons for the initial euro weakness. Perhaps the Trump tariffs actually would be more influential on the euro in the short term than this inconclusive Italian election. Data events this week, there's a lot of it. We'll focus on the key ones just to keep it brief. It's non-farm payroll, U.S. employment data this week, normally a critical event for the markets. Still is, but with Jay Powell's testimony last week, it would take an extremely weak number to change the outlook for interest rates, I think. We've got central bank monetary policy meetings as well, 4 of them. So let's just go through the central bank meetings just to highlight them. First of all, on Tuesday, we got the Reserve Bank of Australia expected to leave rates unchanged. That happens at early morning on Tuesday, so when we get in, we'll find out exactly what they have done. Then on Wednesday, 3 o'clock in the afternoon, the Bank of Canada expected to keep rates unchanged now. There was some speculation that rates would be pushed up a notch. Consensus believes recent week data will put paid to any rate rise. Thoughts there. Thursday, the main event, which is the European Central Bank, the minimum bid rate announced at 1:45 on Thursday, expecting no change there, of course, no change in the QE program as well. But really, it's what the press conference, Mario Draghi says at 1:30 on Thursday, forward rate guidance, really. That's what the market is looking for now as other economists start to tighten or push up interest rates, certainly in the US and perhaps in the UK as well in May. The final monthly policy meeting of the week is on Friday, and it's overnight from the Bank of Japan, widely expected to keep rates unchanged at these very low levels, supporting the, improving Japanese economy as it is at the moment. Employment data, let's focus on that. Split into 2 sort of releases, really. We have the ADP data released by the private payroll company at 1:15 on Wednesday. Still a particularly positive number, 194,000. Precursor to the main event, really. Usually quite volatile and a little unreliable for many traders, but still a fairly positive number there. And to the main event on Friday at 1:30, the non-farm employment change. We're expecting still a strong number, 204,000 jobs created last month. The headline unemployment rate of just 4%, which is a very tight labour market, really. But the key thing to watch, as we realised from last month, was any jump in the weekly average earnings, which was the result, which caused basically the stock market angst last month, jumping from +0.2 to +0.3. Another jump really would set the cat amongst the pigeons, but we're not expecting that. +0.3% on the average hourly earnings for last month. Other data of interest, actually on Monday, it's the services sector data, which is already out, actually, just come out as I speak. Let's just quickly refresh it. 54.5, so that's a very strong reading, actually, after 53 last month. 54.5, that's a very positive result there. And then on Monday afternoon, we have the US services sector as well, referred to as a non-manufacturing PMI, which is the services sector. 58.9, bit of a pullback from last month's 59.9, but still very, very strong indeed. Anything above 50 is suggest an expansionary mode, very much expanding there in the US. That's it. Thank you very much for listening. All the best. Bye for now.
If you would like more information about trading the right way, Trend Signal is giving you the opportunity to see and hear about its services live at a free online seminar. Take a look at the Trend Signal website for the latest events and to book your free place.